Bom dia a todos, é com grande prazer que eu estou aqui com os dois cofundadores da Oaktree Capital, Howard Marks e Bruce Karsh. O Bruce Karsh é o CIO da companhia e também co-chairman da companhia, e o Howard Marks é o co-chairman da companhia, e creio que muitos de vocês já o conhecem por conta dos investment memos e do livro que o Howard publicou alguns anos atrás. É com grande prazer que o BTG Pactual estabelece uma parceria com a Oaktree Capital para oferecer para os nossos clientes uma alternativa de investimento da estratégia de Global Credit, que contém 10 estratégias diferentes dentro de um mesmo produto, disponível para a nossa clientela aqui no Brasil. Okay, let me start with the easy questions then. Where we are in the credit cycle right now?
When people ask that question, often they want to know, are we at the beginning of the end? We know we're not at the beginning. We came out of the global financial crisis more than 9 years ago. The credit world has been moving up ever since. Up means up in returns, but also down in prospective return and down in safety. There's a high degree of activity and competition to invest in the credit world, and that means that this is a time for caution and selectivity in our activities. We would say we're in the advanced stages. We can't say we're at the end because you never know when things are going to end, and there's no reason to think it's going to end anytime soon, but we certainly are in late stages.
All right. I know that you guys talk a lot about risk and take in consideration, it's basically the first principle for you guys. So if you look at the world today, what are the key non-unknowns that you're more concerned about?
I think the greatest risks are on the macro side. How long will growth continue? For example, in the US market, we are in the 10th year of a recovery, but it shows no sign of weakness, and in fact the last quarter was one of the strongest on record. Political leadership is a question in all countries. Trade war is an area of uncertainty. Fed policy, the Fed was in a stimulative mode for a long time. Now it is switching to an anti-stimulative mode. Will it continue? At what pace? With what effect? So most of the uncertainties are macro. The companies themselves are doing extremely well.
Given the size of the company and the global reach of Oaktree Capital these days, what is the is there any scalability problem that you guys face whenever you're investing?
We think it's extremely important to limit our assets under management. We have not increased our assets under management basically in the last 5 years. And in the advanced stages, one of the keys is to be able to be selective. And selectivity increases as you limit the size of your assets. So the sizes of our funds are all very moderate, and we think that that's essential today.
Which recommendations would you give to an individual investor to become a better investor these days?
I think the most important things in investing, you say these days, are always true, which is number one, to invest to take advantage of what you know, but diversify to protect against what you don't know. To have a portfolio which is prepared for bad times, even though you want to have the ability to make money if times are good, and to control your emotions. Emotionality is the investor's biggest enemy. Getting excited when things are going well and prices are high on buying, and getting depressed when things are going badly and prices are falling on selling is the opposite of what we want to do. Now it takes emotional control in order to avoid doing the things that everybody else is doing wrong, but it's essential to try.
I love our analogy to tennis about what you call the loser's game. Could you share with our clients what it's about?
Well, if you watch the great players like Djokovic, they win by hitting winners. At the championship level, you win by hitting a shot that your opponent cannot return. At the amateur level, where things are not so much under control, people like me win not by hitting winners, but by not hitting losers. If we can push the ball back and keep the ball in play, eventually our opponent will hit a loser, will win the point. In investing, not everything is under our control. We don't have perfect knowledge of the future. The processes don't work like they do in engineering or in championship tennis. So we have to know how much is beyond our control and beyond our knowledge, and we place at Oaktree a very high emphasis on not hitting losers. Our company motto, if we avoid the losers, the winners take care of themselves. If we can have a portfolio which has a very low incidence of unsuccessful investments, then by definition the rest will be successful, sometimes even better than that, and sometimes fabulous. But with no or few losers to pull us down, we're bound to have a great result, and that's what the record shows.
I think many people read your first book, The Most Important Thing, and you're about to launch your second book, Mastering the Market Cycles, in October. So could you perhaps share with us a few key things that you put in the book?
As I say, we don't know what the future holds. We think of the future not, first of all, no one should think that they know what events is going to happen. Nobody should think of the future as one thing that's going to happen. We should understand the future as a probability distribution, a range of outcomes that may happen, and we should understand which ones are more likely and less likely. That's how we get a probability distribution. But we should understand that even though we know the distribution, we still don't know what's going to happen. The best we can do is tilt things to get the odds on our side, to invest more when the probability distribution is favorable and less when it's unfavorable, to have more risk in our portfolios when the distribution is favorable and less risk in our portfolios when it's unfavorable. And the best way to do that is by understanding cycles, how they happen and why, and where we stand in the current cycle.
You guys co-founded the firm more than 20 years ago, and at BTG we believe that people is the key asset that any company, especially an investment company, has. So could you share which are the key principles, or how do you manage people within Oaktree Capital?
I think the answer is, first of all, we run a decentralized organization. Bruce and I set the tone. Move forward with caution is our current tone. The management of the actual portfolios is in the hands of experts. It's not democratic. We don't have large numbers of portfolio managers. In each strategy, we have one person or one duo who have been highly experienced, have demonstrated a record of success, and worked their way up to the level of portfolio manager. We don't second guess their activities because we know that in investing, lots of good decisions are not immediately successful, and a lot of bad decisions produce success right away, which is undeserved. So we stick with our people. We don't criticize them just for being wrong. We don't look at just 1 year's performance. We don't reward people just on their numbers. We reward people on the totality of their work. And importantly, we share the ownership of the company. We think it's very important that all the key people be shareholders, so that they work for the success of all the clients, not just the clients in their specific strategy. So at Oaktree, roughly 20 to 30% of the employees have always been owners, and we think that that's very effective.
The other thing I'd point out is that at the outset, when we formed Oaktree, we created a 6-point investment philosophy, the number one tenet of which is to control risk and protect the downside. And one of the things we've been able to do is get the complete buy-in of all of our investment professionals, especially the portfolio managers, to that key investment philosophy. So everyone is reading the same playbook. They understand what Oaktree is and what Oaktree stands for, and manages portfolios accordingly. And that's quite important.
The two of you have been working together for such a long time, even before founding Oaktree Capital. So could you share with us a little bit of the secret sauce of such a successful partnership?
Well, I think I once wrote that the key to a good partnership is shared values and complementary skills. So Bruce and I strongly share values. We both are relatively conservative people. We both think that risk control is more important than return maximization. We both believe in respect for the individual and not taking a harsh approach to our employees. We both believe in putting the client first, more important than Oaktree profitability. So that's what we share. But we're also complementary in many ways. I am a gut decision maker, quick, and then finished. Bruce is very thorough. He tends to rethink our decisions. He comes in the next day and he says, no, I don't think that was right. And then we engage in it again. So this is extremely important. Some of our best decisions have been made at the extremes to get out of the markets largely in 05-06, leading up to the crisis, to aggressively buy at the end of 08 after the Lehman bankruptcy and in early 09. These things are not easy. It's very hard to buck the trend, to sell when everybody else is excited and to buy when everybody else thinks the world is ending. Analytically it's the right thing, intellectually it's the right thing, but it's very difficult. And I think that one of the greatest accomplishments is that we support each other at these times. Sometimes his job is to be more optimistic than me. Sometimes my job is to be more optimistic than him. But we have enabled each other to make better decisions in combination than we could have made separately. And that's the definition of a good partnership.
And I would add that I think in some ways Oaktree's success is a reflection of the great partnership that we've been able to forge, because while we may have disagreements about business or investing or intellectual debates, we never have arguments.
That's right. Never had an argument, and I think the key, I think you're right, and the key is respect.
Right.
You can disagree, but if you're disrespectful, it's not going to hold together in the long run.
How do you guys deal with mistakes?
Hopefully analytically. I mean, the key is not whether you made a mistake. Making mistakes is part and parcel of what we do. Nobody bats 1,000. But the question is, do you, number one, try to forget it? Or number two, do you analyze it and say, what was the mistake? Is there something we should learn from it? Let's not do that again. And I think we're very good at the latter.
There are mistakes of commission and there are mistakes of omission. And we really, as a firm, try to focus on minimizing the mistakes of commission. And we've done a pretty good job of that. We've really not made all that many mistakes. I think to the extent that we've missed things, it's been by being probably overly conservative and not taking advantage of certain opportunities that have arisen as a firm. On the investment front, I think we've done pretty well on that side.
But you know, you mentioned my new book. One of the last things in it is a quote from a great investment philosopher, Peter Bernstein, who said that making mistakes is not something to be embarrassed about. It is not indication of a failure. It is part of life when you live in an uncertain world. Our job is to deal with an uncertain future, and you have to do the best you can. You will make some mistakes, and you have to go on from there.
Great. Well, thanks very much.
Thank you, Ennio. It's a pleasure to be here with you.
Thank you so much.